Unfortunately, we're marching towards a worst case scenario because that's where they want us. They want to get us by the throat, as they always do. Problem, reaction, solution. The current system is being dismantled. It's being dismantled by design. Central banks are behind it. And unfortunately, a lot of people aren't going to make it out of here in the literal sense.
This is Kaiser Johnson with Liberty in Finance, and this is the Miles Franklin Weekly Special for October 23rd through October 30th, 2023, while supplies last. This week we feature 3 different specials. 1 10th-ounce Gold Philharmonics at $30 over melt with a minimum order of 5. Half-ounce silver polar bears at $2.75 over melt with a minimum order of 100. And 1-ounce platinum maples at $80 over spot. The Austrian Philharmonic is the most popular bullion coin in Europe, and the gold 1 10th-ounce Philharmonic offers additional flexibility along with investor trust. With your order of 5 or more, you pay only $30 over melt. Next, the Royal Canadian Mint is one of the most trusted mints in the world, and the half-ounce polar bear is one of their most popular Call of the Wild coins. 1/2 ounce of 4/9 fine silver, it's available at just $2.75 over melt per coin with a minimum order of 100. Also from the Royal Canadian Mint, we have the 1-ounce platinum maple at just $80 over spot. Many consider platinum to be a highly undervalued metal at the moment, since over the last 30 years, platinum has generally been significantly more expensive than gold, but currently sits at less than half the spot price. Best of all, the 1-ounce platinum maple is just $80 over spot, giving you access to a premier coin in a premier metal at one of the lowest prices in 20 years. All of our specials this week are IRA eligible. And if you'd like to learn more about a precious metals IRA, call us and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty in Finance. We're delighted to have this returning guest who's widely followed. Gregory Mannarino is the founder of TradersChoice.net. He joins us this Monday, October 30th, 2023. Greg, thanks for coming back on Liberty in Finance.
Thanks for having me back on Liberty in Finance. I love the show. Love you. Things are great.
We watch you fastidiously because you put out publications like twice a day, plus on the weekends with a weekly market update as far as what's the look ahead, markets a look ahead, and you keep people appraised of what's developing or what's falling apart in the world around us financially. You've been warning us for quarters, if not for years, about fragility and instability in the debt market, which is the sort of the mother of all markets. We'd like to get your update on that. And then you've often pointed out the phenomenon of all wars are bankers' wars, that when we start to see any kind of a decrease in the global you could say the petrodollar system, oftentimes we'll see an escalation in conflicts around the world, and sometimes in ways that is timed just too horribly to be a coincidence over and over and over again when it's time for distraction away from the plight of our financial lives into something that can make an excuse for the need to expand credit and debt creation and so on. So could we start back at the beginning of that with why you focus on the debt market as sort of the mother of all markets, and why you see that as something that is coming apart at the seams currently, and why people need to be concerned about that?
The debt market is the key. It's the driver. It is the number one market of the world. People don't realize that because they're always told where to look. You turn on CNBC, Bloomberg, Fox Business, pick one. It's always about the Dow Jones Industrial Average, the Dow Jones, the 30 companies. That's all we're talking about here. But they don't talk about what's driving the markets. The driver of the stock market, the driver pretty much with regard to price action of everything is action in the debt market. Whatever happens in the debt market has a ripple effect throughout all the other markets, being that the debt market is, in fact, the largest market of them all. Okay, and the dollar also, I'm including here, central bank issued currencies are also part of the debt market as well here. So everything derives value from that. So what I do and what I've been talking about, as you alluded to, for a decade, is keep your eyes on the debt market, because that's going to tell you what's going on. Now, we've been in an environment Well, since the last meltdown here, 2008, of incredibly suppressed rates. How does the central bank keep rates suppressed? Can they just say it? Can they just say, hey, guess what, everybody? We're going to keep rates at X? No, can't happen that way. The central banks must get into the market and make it happen. They have to buy the debt. This has created an environment that is so twisted, so distorted, that it's really even difficult for a person like myself who studies this around the clock to get my head around. I mean, let's think about this. If we understand that, let's just say the stock market, understanding that it derives value from the debt market, that means the stock market can be considered a derivative. Okay, the stock market derives value from the debt market. If the debt market has no real price discovery mechanism behind it, how could anything, especially the stock market or housing, have a real price discovery mechanism behind it? It can't. What this does is creates unbelievable distortions, again, across the spectrum of asset classes. And I've been warning about this again for 10 freaking years. And it's starting to get extremely real now. There's a lot of talk. It's amazing to see, even on the mainstream as of late, with regard to instability here in the debt market. What people don't know when they're not being told, and I want people to understand this, just do your own research a little, take a nanosecond, is realizing that we are in the largest, most vicious bear market in debt we've ever seen before. The bond market is selling off around the world. This phenomenon is something that you and I have spoken about, we have warned about, would eventually occur. And that would cause rates to spike. It would put pressure on world stock markets. But there's a lot of effort right now to keep rates suppressed. And part of this is war, the expansion of war, the propagation of war. I could go on and on about this, but the root cause of the problems today, the single root, what does this all boil down to? One thing and one thing only, done again. That is a liquidity problem. Liquidity meaning that even though the world today is awash in debt, more so than we've ever seen, and even though the debt it keeps being expanded on to an incredible degree, and war expands the debt faster than anything else here. It creates a larger demand for borrowed dollars than any other human endeavor, okay? There's not enough of it. There's a black hole of debt underneath this. The whole entire world is being sucked into a black hole of debt, and that hole, no matter what they keep fueling it with, is never enough. So this liquidity crisis we're in, which we are in, people are not supposed to know that. Part of it is the sell-off in the debt market. This moment of maximum saturation that I've been speaking about again for almost 10 freaking years is hitting us now. So what they're doing here is they're finding, again, any reason imaginable, things they're going to make up and throw at us to pull cash into the current system. And all this is doing is exacerbating, again, the underlying problem. They can't fix this. It cannot be fixed. No amount of war, no amount of anything. All this is doing is exacerbating the problem. We're creating more need for debt, a bigger black hole for debt, and that hole can't be filled. And again, what's going to happen here is what I think you and I have spoken about a million times, is they're going to blame the war. They need a scapegoat. This war, this expanding war, it started with Ukraine. Now Israel is going to get bigger here. They're going to use this as a scapegoat. It's the war's fault why the financial system is collapsing. It's the war's fault why the Federal Reserve and central banks can't get a handle on inflation. But what they're not telling people about, again, I mean, it's a lie by omission. You turn on the mainstream propaganda, and they're talking about the hundreds of billions that are going over here, the hundreds of billions. They're not talking about how it's massively inflationary. It's unbelievable. But the Fed's in the fight of their lives. Oh yeah, we have a meeting this week, don't we? Wednesday? They're not going to raise rates. They're not going to, in my opinion. I could be wrong, but I doubt it. I think they're going to stand pat here, but they're still fighting inflation. This is a lie. They've been selling people this lie repeatedly. They knew from the get-go this would not be temporary, this would not be transitory, and that it would continue. And it will continue to get much worse moving forward.
Another thing that people have been watching and very concerned about this year in particular, starting with multiple bank failures at the end of first quarter, is the stability or fragility of the banking system itself. We had JP Morgan head Jamie Dimon, for the first time in his career there, selling off 10% of his stock last week and saying, or announcing he was going to, and saying this doesn't mean anything about the company or the future. It's just balancing my portfolio, etc. Nothing to see here, folks. Could you give us your view of the stability of the banking system and how that's tied to this liquidity problem you described in the debt market?
Dunnigan, over a year ago, I started warning people that there was a problem with the banks. Okay. Of course, people thought I was out of my mind at first, and then we started seeing the regional banks here fall under pressure. It's so obvious to me that the banking sector is in trouble, and I mean more so than anyone is being allowed to know. It's just so obvious. How do we know these problems exist? We could just go back to what I told people over a year ago. No deposits, no loans, and no deals. And this is not just for the smaller banks. The larger institutions are also in that same boat, but it's even worse. The larger institutions, let's talk about them real quick. They've loaded up on government debt, which is now they're watching their portfolios value evaporate as bond yields are rising. I mean, all you need is one or two functioning brain cells to just see this happening. Not only do we have this happening, but we also have loan defaults across the board, which is skyrocketing. And then on top of that, there's a whole other thing that we haven't even touched on. This whole real estate issue here. This is going to implode. This commercial real estate is a ticking time bomb. It's going to go off. And now we're starting to see warnings. Again, all this stuff that you and I have been trying to tell people for not freaking long. Maybe they'll start paying more attention, because there are people like you and I believe the people that follow our work, that are able to see a little further down the road than maybe the next guy. But it's not so hard to do. You just look for cause and effect. And then you got to realize, again, what's the goal? Who's our real enemy? And in my view, you know who that is. It's the central banks. This is the public enemy number one. They're out here destroying the world. They're destroying the world economy by design. They're taking it apart. They're expanding wars. They're funding wars. Central banks are responsible for this entire thing. They fund all wars. Where does the cash come from? You see, we heard from President Biden, and we heard from recently from former President Trump. Oh yeah, we're gonna support Israel. Everything we got. I'm all about. Look, they're not telling people where the money's coming from, and that bothers me. Okay, yes, go spend hundreds of billions, but we don't have it. No country has a war chest.
Janet Yellen, I thought you were going to add to your list there of people in positions of power who are saying we can afford this.
Another one. You could go on and on. Janet Yellen too. Any of these freaks, any of our politicians, they want to spend money that we don't have. Okay, why can't we be told the truth? Why can't they tell people we are broke, we got no cash, we don't have a war chest to fund this war or to fund that war or anything. We have to borrow that cash. It's unbelievable. But it's part of the game that's being played on the people of not just the United States, but the people of the world. It's incredible. Why did our forefathers here in the United States want to have a hard asset backing the currency? Because they knew that we would not be able to fight or fund endless wars. The fiat monetary system is a curse upon the world. People, and they don't know what's going on. Again, if we had a commodity-backed system, which we'll never have, because this is how central banks keep their power, is by issuing their product to the world, and they're willing to fund anything. They'll fund it all because they have the ability to add digits to a screen. If we had a gold-backed or a commodity-backed system, we couldn't fight endless wars here. If we went back to a wealth-based system, again, central banks have taken over the world. They've taken over the economy. They've taken over the financial system, the financial markets. Then we wouldn't be able to fight endless wars. There wouldn't be, okay, let's send $162 billion over there or another $100 billion. We can't do it. But now that central banks, we have the ability to just conjure this cash out of nothing. Okay, we can do whatever they want, and they fund both sides. We all know this. How many times have we been warned that all wars are banker wars? I mean, I don't know how much more proof we need. It's just in our face.
In addition to the instability of the banking system, where people are starting to wake up and realize that nothing in the bank belongs to them, there's also an awakening starting of people being concerned that stocks that they think they own or deposits in their brokerage accounts might also not be theirs for very long. We have a question from a viewer. Edward McLaughlin says, is David Roger Webb, in his short book, The Great Taking, in your view, correct in his thesis that the entire assets of the world have already been primed by contract to be funneled away from investors and into one entity?
I've heard a lot about this publication here. I haven't read it yet, so I can't really give a very educated perspective on that.
In a nutshell, I think what he's pointing out in the book is that if you look at how difficult it's become, just as ownership of real money, gold and silver, now has been abstracted away into Federal Reserve notes, and then that's going to be extracted away into central bank digital currency, where it's farther and farther control removed from the individual, and all the legal structures set up so that nothing in the bank is yours, for the Dodd-Frank Act of 2010, for example.
Well, that's absolutely true, isn't it?
Saying the same thing for stocks, as far as you don't get to hold the actual shares of the company, that you don't even get the paper shares themselves. They're held in street name, or they're held in the name of some, whether it's the clearinghouse and the company, the DDCC, or whatever it is that all shares are actually held by.
That is very interesting, to think about it. If you don't hold it, you don't own it. Same kind of thing. I guess it comes down to that. What do I think about it? I think it's absolutely, more than likely, has some bearing on truth to consider. All of us, including myself, obviously, I'm pretty heavily invested in the market. Most people know that. It's not any secret. I'm also heavily in. My largest assets are not stocks. My largest holdings are real things, gold, silver. This is the stuff I've been holding for years, and I haven't added to those positions in a while. But I have probably enough of it for now. At least I would like to think so. But going back to this, absolutely, look, there's always risk. There's always some kind of risk, and unless you have it in your hand, and even then, is it possible that someone could come along and take it? Yeah, sure, there's that too. But the whole thing is just too twisted. It's such a freak show. We have to do something. In my view, the best thing we can possibly do is bet against the debt, become our own central banks, and then realize that we're not each other's enemies. That's what they want us to believe. It drives me out of my mind. I hate these people for these reasons. Hate these people even more back for those reasons. Everything they can come up with to keep people's eyes off the ball. And the ball, to me, is the central banks. They run the show. They call the shots. So I don't know when people are going to wake up, and I think they are. I think people are waking up. They're starting to say, look at our channels. We're starting to grow. We're growing more. People are jumping on board with us, and they're joining our movement. This is a movement here. There are people like you and me, and the people that follow our work, thankfully, that understand this. And if we could make a difference, if this video that we're doing right now could make a difference in just a few people's lives, and they can say, hey, you know what? This is interesting stuff. Maybe I should open my mind and think a little bit. Then we've done something good. That's all I want to do. I want people to think when they listen to me talk, or you talk, or anybody, don't take this stuff at face value. How does it hit you? Do you feel like what you're hearing, does it make sense? People know the truth when they hear it. In the words of Greg Hunter, he told me that a million times. It's so true. I don't know. I want people to just think, to open their minds, to realize what's going on, understanding the political game, how everything is just not what it appears to be. And again, we've been warned throughout history, I don't know how many times by people, but people still don't listen. They just don't listen.
When you were talking about people hearing voices that don't ring true for them versus checking their gut and trusting their gut and listening to what really does ring true, I was told that the saying we have, it rings true, it has a ring of truth to it, comes from this sound. that the sound that silver makes when silver coins hit each other is ringing. They don't clatter like modern coins, they ring, and it has the ring of truth to it. And that gets us back to other real commodities. Right now, there's a curious phenomenon going on. Simon 359 asks, with war raging and expanding going on in the Middle East, how is it that oil is going down? And I noticed when we were driving yesterday, we were seeing some of the lowest gas prices we've seen in several months around here. And it reminds me of when our dear departed friend Rob Kirby said it feels like we're at that moment when the Wile E. Coyote runs off the cliff and he's just sitting there in midair and he doesn't realize he's about to fall yet. But anyway, can you talk to us about what's going on with the petroleum situation, which you call the lifeblood of the military-industrial complex?
Sure, absolutely. Look, it's a volatile market right now, especially because of what's going on over there. One day they think the war is going to slow down. And right now, it's about speculation as to where that war, the new war, and all these wars are going to go. Here in the Middle East, here, of course, if this does expand, you can see crude oil go exponentially higher than what it is, and I believe it is going to expand. I think it's just a matter of time before crude oil does just make a monumental move higher. With regard to commodities in general, you know my take on it. I think that's the place to be. I think people need exposure to commodities, gold and silver. Silver, my favorite of all time. You know that. Everyone knows that, who at least follows my work here. I think commodities are going to, I mean, it's just a simple equation. If we know eventually, and this is what they're doing here, the debt market is going to melt down, and that's going to send the world stock markets off into an abyss that people are not going to believe. So cash bleeding out of the debt market, cash bleeding out of the stock market is going to make its way into commodities, and commodities are going much higher, especially ones that are unbelievably suppressed. And in my view, as you know, and I just look at a couple of metrics. I look at the Dow gold ratio, and I look at the gold the silver ratio, and just trying to figure, if we just understand that the stock market has no bearing on reality, it has no place being here. It's just easy money that's kept this propped up. Where's the bottom? The bottom could be where 6,000, 8,000, lower than that, 3,000. We don't know where it is. We know where the Fed stepped in at 6,000. I think we're going to get a 1-to-1 gold to the Dow, and at least a 15-to-1 gold silver. But with regard to crude oil and commodities in general, they're all going up. They're all going up. Cash is just going to look for places to go. It always does. And, it's going to go into other things as well, too. Artwork, classic cars, all this kind of stuff. But commodities are going to hurt people the most because it's going to become very difficult for people to get this stuff. It's going to become very scarce. It's unfortunately, we're marching towards their worst case scenario because that's where they want us. They want to get us by the throat, as they always do. Problem, reaction, solution. The current system is being dismantled. It's being dismantled by design. Central banks are behind it. And unfortunately, a lot of people aren't going to make it out of here in the literal sense. I really think there's the bigger part of this is control. And I think what they want here, the central banks, who are the one world government we've all been warned about, nothing would probably make them more happy than to reduce the population of this world, probably by a lot. And in my view, they're going to use tricks, whatever they got to do to get people to fall in line. It's working.
That's one of the reasons that we're out here, as you pointed out, is that many people as we can reach out to and wake up from that herd mentality. Our collective intelligence goes down the more that we act like a herd and just listen to whatever the mainstream media said. But our intelligence goes up a lot when we trust our instincts, our guts, our intuition, and hear the truth. It has a ring of truth when we know it. Greg, we always appreciate your presence here with us. And how can people follow you more often, as they should, to stay abreast of what's going on right now?
I appreciate that. You can go to my website. You can just YouTube, Google me. I'm pretty easy to find.
So, folks, don't hesitate to look up Greg at traderschoice.net. Make sure you sign up for his frequent updates, because those are worth the listen. And Greg, thanks for joining us here again on Liberty and Finance.
Thanks again for having me. I really appreciate it.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.